Hey guys, welcome back to my channel. So in today's video, we're going to be going over structure. A lot of people are confused with regular structure versus breaker structure. So in this video, we're going to try to help you guys understand the difference in when to use a breaker structure. First, I'm identifying imbalance, which is a point of interest. Okay, so now I just drew some structure lines so you guys can see how we got down to this point of interest. Okay, so right here at this exact moment where this circle is when we actually reached the POI. This is when we first got into our imbalance zone. Okay, so we notice how it kind of breaks through the point of interest first, goes down, and then starts coming back up. So I'm dividing the screen in half. This is what I do visually in my head to see before the point of interest and after. So after that, I'm going to start identifying my last highs, because on the right side of the POI, I'm going to try to match at what point do I actually break these highs, mostly the most important high, which is the first one. Okay, so this arrow, we're not above. The second arrow, we're above. So this is our actual breaker structure. Breaker structure is for when the trend is changing and rejecting a point of interest. Breaker structure is for when the trend is changing and rejecting a point of interest. Breaker structure is for when the trend is changing and rejecting a point of interest. Because people are confusing breaks and pullbacks that happen to have higher highs. Okay, breaks is when you have structure going up or down, so let's say down, rejecting the point of interest, and then we finally get confirmation once it starts turning around and we actually get a break of the previous structure. So I'm hoping this illustration helps you kind of understand what breaker structure really is. Okay, great. So now we have a breaker structure, and I'm just identifying our lower lows in the new structure. Okay, so this is our new trading range. After the breaker structure, this is the new trading range that we're looking for a pullback to get into. Once we get our break, we're going to enter in on the pullback. Okay, so you can use the 50% at the point of interest or the one that went below. It's just wherever your new point of interest, aka your new imbalance, lines up. Sometimes I've seen it do both. Depends on your imbalance. It's usually not that big of a difference. We're gonna look for at least a 50% pullback that aligns with either an order block or imbalance. So let's pretend we have it here. And we're not going to leave this big fib on our screen because we do not do that. We're going to make our 50% line, delete the fib, and keep our charts as clean as possible. Okay, great. Now we found this point of interest that's imbalance. So we're just going to mark that up, and it aligns with our 50%. And now we're going to place our risk to reward with our stop loss below that low and our take profit at equal highs. Okay, so now the market's going down to our POI. We enter the trade and go up, take profit, smash. So now I'm going to show you guys how to do this on the actual chart itself. Taking a screenshot. I did this, I thought it was helpful. I dropped it in my Telegram. So if you guys aren't in my Telegram, definitely join that. I drop a lot of stuff in my private as well as my free Telegram as well. Link in bio. Okay, so first I already identified this as a point of interest previously. So now I'm just going to use replay mode so you guys can kind of understand. So we can just start with the info before it happens. So this is a previous point of interest that we had that just got filled. So we're boom, we hit our point of interest. So now let me just go over the structure on how we actually got here. Boom, structure to the point of interest. Okay, so now we're identifying the new range that has to pass the previous structure, aka our breaker structure. So let's watch the candles print. And personally, I don't use wicks. That's just me, personal preference. I like to see big bodies break, not just a little bit of a body. I want to see a big, like, break of structure, not a casual walk of structure. I want to see a big break. So in this particular scenario, So I like to do this in replay mode. At first, I'm like, okay, break a structure. And then the market doesn't retrace. It's still going up and breaks another point of structure. So this is my actual real point of structure. Sorry, break of structure. Until we start getting deep retracements. And then I'm like, okay, let's look for the point of interest. So the point of interest I see here. So first, I'm going to actually identify this side of the structure. And now I'm going to look for my point of interest. So I cleared up all the lines just so it's easier to see. So this is going to be my point of interest for the pullback after the break of structure. Okay, guys, remember it's after our point of interest, after it's rejecting our point of interest, after it's changing the trend. Okay, so these are my two options. I like to shorten my imbalance just because I enter at the fill. So I don't need a big box across the screen for no reason. So the balance at the top is more likely to align with the 50%. So even if I put that to wick, it'll be a little bit closer to 50%, but this is the imbalance is closer to 50%. So let's watch this play out. Boom, right into our 50%. Now let's watch. Yes, I forgot to move my full imbalance. So now it aligns fully with the 50%. So I'll trade an imbalance anything below 50%. Most times imbalances or points of interest that are above 3.8, I find turnaround. And go back to my entry. So I want to go to the 5-minute time frame just so you guys can really see. And I want to put a risk to reward on it because it's not an official setup until you put risk to reward on it. So I went on the 5-minute time frame just so I can get a better stop loss. I'm on the 5-minute time frame. I'm on the lower time frame, so I know I need something super tight. So I'm identifying equal highs as a take profit, looking for a 1 to 10 because that's all I need. So in this scenario, I got a 2.66, so I needed something higher, but I didn't want to be greedy, so I didn't just throw it at the top of my screen, right? I actually make sure my points of interest are relevant places where the market has stopped and started before. Okay, it's still not amazing, but this is what I have, which is a 7.63. I still like to work with my equal high, so I'm going to try one more equal high, and if this doesn't work, then I'm definitely not going to take this trade. Okay, I have a 1 to 9. This is the highest I will go based off the data given on the screen. Notice how the candlesticks printed. It hit my exact area I talked about and then started retracing, rejecting, having resistance. Okay, that's why we try to get in and out with a 1 to 10, nothing more, nothing less. We're not greedy. We can be very profitable traders just trading 1 to 10s. Okay, no matter on what time frame. So thank you guys so much for watching today's video. Don't forget to comment, like, and subscribe. Join my free Telegram. The link is in the bio. Study my videos before you drop charts, guys. Don't just drop some support and resistance, crazy stuff in the group because I will delete it. Not here, no way. Make sure you study my videos. I will see you guys in the next video.